Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. An interesting week. We were just joking before we started this program, asking if your brackets were busted. I think the markets are busted in many ways, and we'll go into details about what's going on in this market trade today and some of the issues and concerns. We also know about the global perspective of this banking issue and the economy, what that's all going to mean in the broader picture. We'll take a look at that, the struggle in the beans, and a whole lot more in today's episode.
Imagine a future fueled by soy-based possibilities. A future where creativity and productivity live together under one roof. A future that takes you from point A to point B to point Z, all while ensuring brighter tomorrows for our next generation. A soy-based future? It's already here.
Well, welcome back once again. As you can see, we've got PJ Conradt joining us and Alex Gade. Alex, of course, and PJ with Tredas. And gentlemen, interesting marketing week to say the least. Let's start out with the struggle we saw in the soybean market. Can we dig our way out of it and hopefully see a positive numbers next week?
I'd sure hope so. Looking back, obviously all this fund data and commitment to traders is delayed, and we're going to get caught up here, I think, this week and next week, kind of get back on pace. But funds were showing they were along, 157,000 contracts back on the 7th of March, so a week and a half ago here. I would assume a lot of that they've repositioned and we're working towards more of a flat, slightly long type value. And so that's obviously a positive to the tune of, yes, the markets are down, but it gives us more bullets in the event we get something to push this market higher. And I thought the other interesting piece of information I saw come across my desk this week was the fact demand outpaced supply in the soybean crush markets last month, maybe a sign that this soy biodiesel is starting to really come to fruition, so to speak.
Well, I know, Alex, we've heard a lot of talk, and especially just coming off of Commodity Classic last week, a lot of folks excited about the crush opportunities that are going to be out there through the Midwest. Do you see that adding some possible bonuses to a struggling soybean market?
I would think if it has to, we got one going in Norfolk that should be operational early 2024, what their projections are. So another one down in David City, probably roughly on that same timeline, maybe a little bit delayed, but yeah, sprinkle across Western Iowa about has to kick some positive demand, for sure here Midwest and the Western Corn Belt for bean demand.
Well, as the bean, did you have something to follow up on that, PJ?
I think that's a big basis opportunity that can happen. And the futures market, as soybeans become more, they're already such a worldwide crop, and all of them are, but beans seem to be more kind of that give and take. And the fun thing about the bean market and the bad thing about the bean market is you got three major moving components of soybean meal, and soybean oil. Meal's had a tough week too. It's all kind of works in the whole soybean complex. And, the good news is, I guess China's trying to step in, buy some corn. South America, they're still buying beans, and there's a lot of just things going on in the world. But this soy diesel thing is going to change the way the U.S. looks at planting beans, in my opinion, moving forward.
So you talk about China real quick. What's your thought on their sudden appetite they had for corn this week?
I think as one client and I were talking about, you kind of wonder on one hand what they're preparing for as they buy a lot here. And this can be an opportunity for our prices to rebound. And we'll see, if we can pause these interest rates, and I think they're talking they're going to go up. But if they do pause them post next week, I believe is their Fed meeting again. Mm-hmm. If they were to pause them after next week, maybe you'd see a weaker dollar, which would lead to more exports, especially on corn and soybeans.
Well, as corn goes up and wheat goes up, they seem to go hand in hand, and definitely did not see positive numbers in those grain complexes as well this week. Kind of what are your thoughts on what we saw in the struggle there?
Yeah, from the, corn side of things, yeah, China's coming to the table to finally buy some, corn. We got darn near over 80 million bushels this week with some pretty heavy swings. So hopefully that continues, and hopefully that cures some demand, and we can get a bounce off of our recent sell-off and see if we can get back to like a 650 or 675 type area. just to get prices back up, get above your moving averages, and just look from a better technical standpoint set up on the charts.
So, wheat had a good day today, Friday, kind of going home too. Kansas City really doing a lot of work to the upside, and you do kind of wonder how much that spills over to the corn market moving into next week, especially with the, essentially a severe drop off we've seen in corn. I guess the good news is funds they've really reduced their long position to the lowest since September of 2020 here in the last couple of weeks. Again, I go back to, yes, that's been detrimental to the markets, but does that give us more ammunition for some sort of spring problem? And planting progress is the next question, right? Or planting prospective planting report, I should say, is the next big moving target we have on the radar.
Well, let's talk about that. Do you see any surprises in those planting intention numbers?
Well, I think looking at it, Allendale come out with 90.5 million acres the other day, and 87.7. So that would be quite a bit lower than what the Ag Outlook Forum was the other day. So, if those are probably towards the lower end, of expectations, you'd be curious to see, what all comes out of South Dakota, northern Nebraska. I mean, those guys are sitting under a foot or 2 foot of snow here. So we'll see how that all thaws out, and if there's any surprises coming out of the Dakotas or what the USDA does there.
I think the interesting thing is, I would say, just blanketly speaking, 90.5 million acres feels supportive to bullish. The flip side of that is, even at a trend line type yield, you're talking about adding, in the ballpark of 500 million bushels to carry out because of some of the demand, call it destruction that has happened over the course of the last 12 months. And so there's so many moving targets within, we start talking carryouts for 5-6 months out. We don't know a lot about weather. We don't know a lot about prevent plant. And, we really don't know a whole lot about anything except for trying to use the whole, the best case scenario. And I think you see that every year. You'll say the South American crop's a great example. We talk every year it's going to be a record crop, biggest crop ever. And then slowly throughout, it seems like they decrease that. And it's still a big crop, and we'll kill this crop a few times unless they come out with some daunting number, 93, 94 million acres, which never say never. That would be, I'd say, detrimental to the overall, tone of the corn market moving into planting. But I don't know. The USDA has a way of keeping things kind of on par, and it'd be hard for me to think they'd make that big a switch with the condition the Dakotas are in and knowing those acres can flip. And you got a 591 spring price, which is what I think the second highest, and it might be the highest on record. Prevent plant's pretty attractive to those guys up there when you got cash rent at X and you're guaranteeing, just call it $600 an acre at some number. And it's a ticket to profitability that you don't got to worry about. And so that is definitely weighing on the minds of those producers up there too.
And it's been crazy as dry as it has been most of this winter. We know, as you mentioned, the Dakotas, Minnesota, Wisconsin, even parts of Montana and Colorado have been just getting inundated with snow. Now we got meteorologists coming out and saying, hey, we're going to see some flooding opportunities on both the Mississippi and the Missouri.
What a difference 6 months makes. Wasn't it last harvest we were talking about the Mississippi being dried up too? That's what's fun. I mean, every year brings different challenges, different struggles, and different opportunities. What that actually, means to, we could have flooding opportunities on the river and still be relatively dry on the soil across. I think that's the hard part. You're gonna get some of that. I just asked a client today that as central Nebraska type stuff, as those rivers get full, how much of that really enters the water table? And obviously some does, but to what percentage, I don't know. The topsoil, we have decent moisture there, but you get down deep, it's still dry. So we're still going to need those consistent rains, and the drought monitor would show that. And I think you kind of flip over and think about basis being $1.70 over, $2 over in western Kansas this last harvest. Could we see very good basis opportunities again this fall? I don't know if they'll be that extreme. Tell me what the weather is going to do, but you're going to see the hangover essentially from higher basis levels going into next year too. So kind of a recommendation we always kind of hold by is, let's not get overly excited maybe about new crop basis today. Let's get excited about corn futures levels, saying that new crop level of 580 to 590 and make some progressive sales there to get yourself comfortable or put a floor on things as we move into the March 31st report and be, every year you position for that stuff and more times than not, it goes the other way, which is fine.
Yeah.
You got to be in position to take the other side of it, because when it does rip and limit to lower, as we have seen in the past, that's a uncomfortable and sleepless night as well.
Well, let's talk about the elephant in the room, and that's been what's been going on this last week and a half or so with banks and the economy. Should those in ag be nervous?
I think it's more of like a risk-off type scenario. So I don't know that, some guys have been asking, it's like, well, with money exiting the banks, is that going to flow over into commodities? Typically, commodities are, an inflation hedge and safe money, but I think it's more of a risk-off type of environment of really looking at some other safe, whether that's, T-bonds or different stuff there, but maybe going into some safer things. I don't know that putting money into commodities would be an overly safe situation, given, if we do go plant a huge number of acres. So that's been kind of some of the questions guys have been fielding, asking, are we going to see, some more speculative money or managed money enter the markets? I don't know. You got any input on that?
I think the CME said they had a record day Monday of transactions or money flow of like something like 65 million. Don't quote me on that, but it was something along those lines. I think the interesting part I read, I think it was from some NAU commentary, was they said, they feel like maybe the economy's been propped up on a Ponzi scheme by the U.S. government, which is a wild thing to say, but there's cracks all over the economy. When does the floor drop out? That's probably a risk-off scenario in my mind.
We are out of time. I appreciate both of you joining us this week. And as we always remind folks, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup right here on the Rural Radio Network.